Ah, good. What question do you guys have, section C? Check. Any consolidation, Samma? Aren't you guys bored of consolidation question? Did you guys solve the section C questions I asked you to solve? Guys, talk. It's 10:45. I've had a long day. Okay. Me sitting and talking itself is eighth wonder of this world. Better you guys respond. Any questions in your mind? Ah, that is something you have to do. That's something you have to do. Not okay. Pick one question: single entity or consolidation. I'm running a poll. You guys decide. Based on that, I'm gonna pick up. I'll pick a question. You just tell me whether it is single entity or consolidation. But any question by 11:30, I'm finishing it. Not more than that. Single entity or section C question. Single entity statements or consolidation. Go ahead. This guys quickly wrote. What is this? Consolidation of. Other five people vote quickly. See, it is 50-50. Some two to three people, whoever is remaining, vote quickly. Two more to yet to vote. Three more to vote. Quickly vote, guys. Single entity or consolidation section C question. Two more people should vote. It's 50-50. Please vote. One more, one more. Over it is. I don't know whoever said one more is. If you vote for single entry, then it becomes 50-50. Quickly, guys, whoever it is, please vote now. So you want me to do single entry? You try first. You don't try, how do I? It's weird and new, confusing. It's an exams question. Last quarter to last quarter, it was asked in the examination. Okay, I'm going with consolidation. Then a lot of people voted for consolidation. Which question is there? Any question is there? Try if possible. You do. Otherwise, I'll do. Any question in your mind, guys, for consolidation, ma'am? I want you to solve a particular question or something like that. I see. Unfortunately, why am I not picking consolidation? Because for Plutus people, I have not finished investment in associates. For them, I finished interpretation. For you guys, I didn't do. That's the reason I thought of doing single entity. We'll do one thing. We'll do single entity now. Consolidation we'll do next day after tomorrow. Not day after tomorrow. Friday we'll do. Okay. What way, ma'am? Pander company type of questions won't come in exam. Did I solve Pander company question? Have I solved any kind Pander company question? That you have to tell me first. I solved up. Yes, I solved. Okay, yeah. Then you might it might come. You can't give guarantee. Just be ready for everything, Kushala. Do the maximum practice. It's okay. Okay. Because even I will not be able to say what might come, what might not come. It's very difficult. It might come. Well, irrespective, I'm gonna pick a question, solve it. Exam standard. Okay, guys. Did we do a question called Sphinx? Sphinx, Sphinx, something like that. Did we do that? It's with. We didn't do no. Okay. Lord and Company. You guys tried it. Print company did we do? Huh? Print company, did I ask you guys to do by any chance? Print company, I asked you to do, correct? In the weekly plan, I asked you guys to do. So print is yours. How about extol we did, right? हो गया. MIMS company, MIMS, MIMS, MIMS. No, okay. We'll do first Sphinx today now. At last, I asked you guys to do Moby. I only did that. Haverford, I asked you guys to do, if I'm not wrong. Flamingo also I asked. Dixon company, I told you can do. Dixon also, you guys can do. Okay. Now, Sphinx company, I'm doing it. It is there in BPP kit. But however, I'm sharing the question on your Telegram group. Now, everybody is there in Telegram. So, I'm sharing it on Telegram group. The question is. Also, you can see that on my screen. See, I will do the working note and I will give you guys the takeaways of the question. It's your job to go ahead and do what? Prepare statement of financial position. But I will also share the financial position for you guys. Okay. So, sharing the question. Give a plain read for a minute or two, please. The font is not visible. I'm sharing the same on the Telegram group. Please do go through. I have one more requirement, that is to prepare financial position. I'm not pasting it that because already too much information is there. Okay. Everyone, please give a read. Alan, Alna, Ayush, Fabia, Nithi, Manoj, Preeti, Harini, Stuti, Shamita, Sarah, Ramesh. Shall we? Okay. See, this is three requirements. One is to prepare, what is it? Schedule of adjusted profit for the year ended. Second, this is for 6 marks. And remaining 10 marks is to prepare financial position. Okay. Guys, I want you to interact properly. Yeah, it's late night. Understand there is devil in me. I also can't. I'm also human. To start. So first, read what are they giving here. They're trying to say the following trial balance was extracted from the accounting records of Sphinx company as at 31st December X5. The year ending is X5. We have all the relevant balances in the trial balance. If you come on the right hand side, you can read something called draft profit before taxation. Yeah, draft profit before taxation figure in the above trial balance has been calculated before any adjustments that may require from notes 1 to 5 below. That means, if you can see, we have calculated profit before taxation, but that's just draft. Okay, profit before taxation. 166.45 million, but that is just a draft. We have not done any adjustments of this 1, 2, 3, 4, 5 adjustments. We have not done anything into that profit. Okay, that is what it is. Now, if I have to read the information from the beginning, all this is going to impact either my P&L or financial position. You should understand. And I also have the second requirement as statement of changes in equity. That's for how many marks? 6 marks. Okay. So you have to understand if it is affecting financial position, affecting financial position, affecting equity, if not P&L. Read this. Until 1st January X5, Sphinx company held land and buildings at cost. On 1st January X5, Sphinx company had them valued at 250 million, of which 80 million related to the land, and no entries have been made to incorporate this valuation. What they have done, they have gone ahead and revalued this particular land and building, where the revalued amount is 250 million, and the revaluation happened exactly during what year? It happened mid-year. Why mid-year? Because my year ending is, or not year end, oh sorry, it happened at the beginning of the year. Correct. So that means my depreciation that I'm going to charge will be completely based on the revalued amount, not on the opening balance. Correct. No entries have been made to incorporate this valuation. Buildings have a remaining useful life on that date is how much? 20 years. Deferred tax on the revaluation is calculated at 20%. That means this will have an impact on deferred tax liability. Correct? Yeah. Next. What is the next information given here? We have a policy to make an annual reserve transfer from in respect of the additional depreciation charged each year. That means if you have any excess depreciation, you will charge that from where? You will put that into retained earnings from revaluation surplus. It goes to where? SOCI, that is statement of changes in equity. Correct? Yeah. Prior to the revaluation, the building were being depreciated over 5 years. So just to make sure to know what is my old depreciation and new depreciation, they've given this details. And plant and equipment is depreciated. Apart from land and building, we have one more type of asset. Plant and equipment depreciated at 15% per annum using the reducing balance method, and no depreciation have been charged in the entire year. Okay. What we have to do, the first working note that I'm going to do is working. Guys, I have seen today people not properly doing the question solving. It doesn't work like that way. I want you to put the heading called working notes. That's it. And put 1. Don't put once again working note number 1. Okay. It's just working notes. Under that you're writing. So make sure it is 1, which is going to be what? Non-current assets. Okay. So everybody under non-current asset, let's go to your trial balance and see how many non-current assets I have. Land and building, plant and equipment. For that, we have a relevant accumulated accumulated depreciation. That's it. The non-current asset has only 2 things in this question. Nothing else is a non-current asset. Please understand and don't waste your time on anything else. It's your job to calculate. Depreciation goes to statement of P&L account as adjustment. Revaluation surplus goes to statement of changes in equity. Excess depreciation goes to statement of changes in equity. And one more thing, carrying amount goes to statement of financial position. The moment you read the adjustment, you should be able to figure out these are all the 4 outcomes that I can expect to have in this particular adjustment. Okay. Yeah. If you see land and building, how much is the cost? Understand. If I have to talk about land and building, I will divide land and building as 2 separate. Working note number 1, land and buildings. Okay. So land has a value of how much, guys? Required. Land has a asset at cost. At cost. As at first cost as at 1st Jan 2000 X5. For land, overall it is 200 million. 50 million goes to land and 150 million goes to building. That is what they have given there also. Correct? All of you see, land and building at cost is how much, guys? At cost is 50 million land and the overall cost is 200. So I've divided 50 of land, 150 of building. And what is their depreciation, accumulated depreciation on this date? Building ke liye it is 90 million. Let me go write that. Less accumulated. Don't put short forms like that. Write down the whole value. Accumulated depreciation is 90 million. This gives me the carrying amount. How much? Carrying amount at 1st Jan 2000 X5. So what will be the carrying amount of land, guys? The land value would be 50 million itself. But building value would be how much? Both put together. It will have a value of overall how much? 110 million. What is the revalued amount? If you can ask the revalued amount as per the adjustment number 1, what is it? It says the land has 80 million, right? And overall it is 250 million. In 250 million, if land has 80 million, the remaining value goes to where? 170 million goes to building. That means what is my revaluation surplus, guys? My revaluation surplus is, for land, it will be how much? It is going to be 30 million. And for building, it will be having a value of how much? It will have a value of 110 million. What is my total revaluation surplus? My total revaluation surplus is 140 million. Correct? Yeah. Where do you think this goes to? This goes to statement of changes in equity. Just write it there itself. Correct. After revaluation, it's your job to go ahead and calculate depreciation based on estimated remaining useful life is how much, guys? The remaining useful life was 20 years. How much depreciation will you charge? 170 million divided by 20 years of. What is the remaining useful life? All of you can see it is 20 years. Your depreciation will be 8.5 million. Correct. What will be the carrying amount of land and building that goes to statement of financial position? Carrying amount at 31st December 2000 X5 will be of how much, guys? It will be of 170 minus 8.5. That is building value 161,500. Land value 80 million. Overall, if I take land and building together, it will be of how much? It will be of 241.5 million going to statement of financial position for land and building. Does anybody have question on this? Similarly, write down the same thing for plant and machinery. What is the next asset that we have? The next asset that we have here is plant and equipment. Keeping it center. So what is the cost as per plant and equipment? It is nothing but 320 million. And my accumulated depreciation is how much? 111 million. Is it so? Okay. It's one more zero I have to reduce. Correct? Yeah. What is your carrying amount, guys? Your carrying amount is once again this minus this, it will have 208.8 million. So if you have to calculate depreciation, it is written down value method. At what percentage for your property, plant and plant and equipment, it is 20%. My depreciation will be for this value is going to be this minus 208.8 million into 20%. 20%. It will give me a value of how much? 41,760. And the carrying amount that goes to statement of financial position is how much? It is 167.40. See, here, one more thing what you need to find out. You need to find out the excess depreciation. 15, not 20. Oh. It's 15, no, Ayush? Wait. Sorry, yeah. I'm taking correct 15 percentage. 20 percentage is tax. My bad. 15 percentage. My carrying amount is 177,480. Okay. So now you guys need to understand one more here. How much do you think the excess depreciation that I have to transfer from revaluation surplus to retained earnings? Don't write short forms like me. Write the full forms, retained earnings. Okay. What is my new depreciation, guys? I already calculated and kept new depreciation as above calculation. You have calculated and kept the new depreciation is 8.5 million. Correct? What is my old depreciation, guys? They're trying to say, have they given any kind of information for old depreciation? Yes. So the building value was how much? 150 million back then. Divided by useful life was 50 years. So what do you think the old depreciation was? The old depreciation was 150 million divided by 50. It was 3 million. Correct. What is excess depreciation? How much is the excess depreciation, someone? Old minus new, that'll be of how much? That'll be of 5.5 million. So this 5.5 million, where do you think I have to go ahead? What do you think I have to do? If I have to transfer from revaluation surplus to retained earnings, what is the journal entry I have to pass? Very good. What is the journal entry I'll pass? Debit revaluation surplus, revaluation surplus, and credit what, guys? Credit retained earnings. Guys, whatever I'm doing it now, where do you think it will go? Statement of changes in equity? Correct. In changes in equity, we will go ahead and showcase this. So from working note number 1, I have so many takeaways starting from what? I have so many takeaways starting from first thing, I have revaluation surplus that I have calculated, which goes to statement of changes in equity of how much overall 140 million. That is nothing but 110 of building, 30 of land, together 140 million. First thing. And I have to transfer 5.5 million from revaluation surplus to retained earnings in SOCI itself. First thing. Correct. Second, we have calculated depreciation overall 8.5 million plus 31320. Together it goes to not statement of P&L. We have already calculated profit. You have to go ahead and make an adjustment towards it. Reduce the depreciation, one thing. And in statement of financial position, I have the carrying amount of non-current asset overall how much? Overall, 241,500 plus 177,480. This is my total value of asset goes to statement of financial position. These are all my takeaways. Did I miss anything? Please tell me. Till now, this is what I have done. Is there anything else I've missed? As far as I know, no. Yeah. Okay. Move to the next adjustment that we have. What is the next adjustment that we have? On 31st October X5, in between somewhere, we have acquired an inventory from an overseas supplier on credit for 40 million dinars. It is not our dollar. Correct. And the invoice was paid in full on 25th January 26. That means, did we make a payment on 31st December, guys? Did we make a payment on 31st December X5 by any chance? If we have not made the payment, do we have to remeasure it on the date of reporting date? No. These people have done what? They have gone ahead and recorded the transaction. No need. We don't have to remeasure, Saravana.
We are going to pay next year only, no?
So is it a monetary liability or not? Payables.
Yeah. It's okay. Yeah.
Then we have to remeasure at the date of year ending, no?
Yes. Yeah. So, yeah.
Oh.
Correct.
So we have recorded the purchase correctly. We have debited purchases, credited payables correctly, but no further entries have been made for the year ending. What do you do? Working note number 2. Can you guys calculate how much is the exchange loss or gain? Guys, 4 minutes. Don't take much time. Foreign currency transaction. Please tell me how much is the exchange loss or gain and what is the payables value that I have to keep on 31st December. Go ahead. Guys, how much is the exchange loss or gain? 2 million gain? Tanish, Sudeep, okay. If you guys say so, good. No problem. On 31st October 2000X5, we made a transaction of 40 million dinars. Okay. On this date, $1 was is equals to how much? $1 was is equals to 4 dinars. Okay. So I made a transaction for 40 million dinars. So if you go ahead and do the cross multiplication, it will be 1 into 40 million divided by 4. It will be on how much? $10 million. Correct? I would have gone ahead and debited purchases with how much? With $10 million, credited payables with the same rate, same value. This we have already recorded. Okay. This is recorded. This was already recorded. But what we have to do, we have to remeasure it. This was recorded already, but remeasurement was not done. Okay. So what you have to do, you have to go ahead and remeasure it now. Because payable is a monetary asset. Remeasure because payables is the monetary, not asset, sorry. It is monetary liability. Correct. So when you go ahead and do this, at 31st December, have you made any payment? No, you're going to make a payment on next year. So only you have to do is remeasure on 31st December 2000 X5 dinars value on the same date. What is the exchange rate? $1 was is equals to 5 dinars. Correct. 40 million dinars will be is equals to how many dollars? So cross multiplication 1 into 40 million divided by 5, it is 8 million dinars. So that means it is reduction in $8 million, sorry. Reduction in payables. What you have to do? You have to go ahead and debit what? Debit my payables with 2 million. What will you credit, guys? You credit your statement of P&L as exchange gain. Now, so again, profit is something which we have calculated and kept. You'll go credit exchange gain, which you have to make an adjustment in the adjusted profit, adjusted value. So due to which, what do you think will happen in your statement of P&L account or the profit that you have already calculated? If you have to make an adjustment, you'll add 2 million. And what is the payables that you'll record in your statement of financial position? Two takeaways. One, exchange gain. Two, profit before tax. How much? 2 million. And what is the, and you will reduce payables by how much? By 2 million in statement of financial position. Correct, people? All of you guys understood? 8 million gain. Alan, you understood? Why 2 million gain? No problem. Understood? That's more than it. Now, anything else? What is the third thing you can see? Third adjustment that you can see is interest on loan note is paid every 6 months with the next payment due on 1st January X6. The draft profit before taxation figure in the trial balance include the first interest payment on the 7% loan notes made on 1st July 2000 X5. That means, what do you mean by this? Anyone? Guys, there is no working note required, but let me give you guys an example here. Adjustment number 3 talks about interest has to be paid in 6 months interval. Correct. Yeah. We have to, very good. Ayush, you're right. So last paid was how much? Last paid was 7% of The loan note is how much? Can you see loan note value 30 million here, everyone? Yeah. So last paid was 7% of 30 million. That'll be of how much? 30 million into 7%. Not, you wouldn't have paid 2.1 million, but rather you would have paid only for 6 months. This was paid for 6 months period. Correct. This was paid on which date? On last paid was 1st July 2000 X5. Correct. The next payment is due on which date? Next payment is due on 1st January 2000 X6. But it is accrued for the last 6 months, guys. Maybe I have to make a payment next year only, but it is accrued for the last 6 months. So you need to understand accrual concept. It is about when it is incurred, not when it is paid. So I have to include 6 more months interest in where? 6 more months interest in my statement of P&L account, and I should create a liability for it. Do you guys agree? How much that is going to be? That's going to be 7% of 30 million into 6 divided by 12, which will give me a value of, again, once again, how much? 1050. If you want, you can prepare this as working note also if you guys are not understanding. You can keep this as what? You can keep this as working note number 3. Interest on loan notes. Able to understand? Is there anybody who didn't understand this part? What is the takeaway from this? 2 things. I will go reduce interest of, third thing, reduce interest in PBT, that is profit before taxation calculation. Second one, create liability of 1050 in statement of financial position. Correct, guys? Understood till now? Okay. We have the fourth one. Look at this. A provision for income tax of 30 million is required for the year ended. Balance on current tax represents under or over provision for the year ended 31st December X4. Can you all see here? Can you see tax? Where can you see, sir? Can you all see current tax, guys? Note 2.5 million. Over provision or under provision? Under provision. What you have to do? Okay. So working note number 4. See, this profit before taxation, it's your job to calculate income tax expenses and then reduce it. Okay, income tax expenses. First, I have under provision of how much? Under provision of 2.5 million. So I will have to go debit my income tax expenses with how much? With 2.5 million, and credit current tax with 2.5 million. Next, what should I do, guys? What is the next thing? If you can see, I have 30 million current year tax estimation. Go make a current year tax estimation. Very good. How much is it? 30 million. What will I do? I will go debit once again. Income tax expenses 30 million and credit what? Credit current tax with 30 million. Now, apart from this, do we have any deferred tax here? Do we have any deferred tax? See, we have deferred tax, but is it going to affect my income tax expenses, guys? Will it affect my income tax expenses? No, why no? Because there is no deferred tax liability opening or closing balance itself is available. The one and only thing it is going to affect is now revaluation surplus. Do you see any closing balance, net assets, all of that is not there? Correct. Yeah. So deferred tax will be how much? It will be revaluation surplus. I will go debit revaluation surplus with how much? What was your revaluation surplus? 140 million into 30 percentage, sorry, 20 percentage of tax rate. You have to create a deferred tax liability. So you go debit your income revaluation surplus. How much? 140 million into 20 percentage. You'll reduce that 28 million. You'll create what? You'll credit deferred tax liability on that part of how much? Of 28 million. Correct, people? Yeah. Now we all know what? Now we all know that what are the takeaways from this adjustment? My total income tax, can somebody calculate? You don't even have to calculate. It is 32.5 million is my total income tax expenses. So what is my takeaway from working note number 4? My takeaway from working note number 4 is income tax expenses going to PBT is 32.5 million. Correct. Current tax going to statement of financial position is 30 million. Correct. And deferred tax going to statement of financial position is 28 million. Is there anything else apart from this? Anything else apart from this adjustment? Is reduce evaluation surplus, statement of changes in equity. How much? 28 million you have debited, evaluation surplus that you have to. Okay. Yeah. Finally, what do you have? On 1st September X5, we made a rights issue. The right was correctly accounted for. This is in statement of changes in equity. So I will do first two requirement. It's your job to go ahead and prepare financial position. Okay. What is the first requirement? They are asking you to prepare a schedule of adjusted profit for the year ended 31st December X5. That is the first thing that you have to go ahead and do. So if I do that schedule of adjustment, this is for how many marks? Just 4 marks. So your answers, if it is for 4 marks, then you should also be limited to 4 marks. Okay. Schedule of adjusted profit for the year ended 31st December 2000 X5. Starting with, do I know profit? I do know profit. What is my draft 2000 X5 profit before taxation as per TB? As per TB is nothing but trial balance. It is nothing but how much here? I have highlighted it, this 166,450. Okay. Now to this, what and all I have to do? See, I have given you guys takeaways. What is the first thing I told you to reduce? Told it you reduce depreciation. How much is the depreciation charge from working note number 1? I have 2 depreciation, correct? Working note number 1. 1. Building. How much is the building depreciation? It was 8.5 million. Correct. Next, I have plant and equipment. How much was this? This was 31,320. Done. That was with working note number 1. Apart from working note, go to working note number 2. What is that we found out? Exchange gain to profit before tax. How much was that? That was 2 million. Foreign exchange gain, working note number 2, at 2 million. Correct? Foreign exchange gain. Working note number 2. How much was this? 2 million. And from working note number 3, what we found out? We found out interest on loan notes. How much was that? 1050. It was my job to add it. Interest on loan notes coming from working note number 3. How much was this? 1050 was supposed to. Then what? After this, anything else? No. Then we had working note number 4, income tax expenses. So you can just write directly working note number 4. One is 30 million. Another one is under provision of 2.5 million. Overall, how much I will go ahead and reduce? 32.5 million. What is the profit for the year goes to retained earnings, guys? Profit for the year that goes to retained earnings is 95,080. If you do this, how many marks will you get? You'll just get 4 marks, not more than that. All of you guys clear in requirement number A? Please tell me if you guys have any questions.
Now, what is the rule for the deferred tax liability where we put
It will go to
debited,
what did I debit?
debited revaluation?
So it will go to revaluation surplus. Where
Usually we are
revaluation
calculating.
surplus is written.
Okay, no. Usually we are debiting the income tax and credit the DTS or tax liability. No,
Where is
why
it?
we are taking to? No, the deferred tax is the rule.
See,
Yeah.
what is deferred
Yes.
tax rule? Generally, what we used to do, if there is an even then, even the normal deferred tax liability is there, we used to divide this around. And remember, revaluation, I'll give it to revaluation. Any increase or decrease due to income tax, I used to give it to income tax expenses. Remember?
Sorry. Okay.
Remember,
Usually we are deferred taxable, temporary taxable, DTS or tax payable only. Usually we are tax liability. We are.
Is there any existing deferred tax in this question already?
Yeah, there is no tax base.
Yeah.
This question.
Nothing is given. That means there is no deferred tax only in this entire company. This is the first time happening. And it is happening purely because of what? Revaluation surplus.
Okay, that's what I asked. So there is no tax base. Now we can straight away we can take the revaluation surplus.
Of course, yeah.
Okay, that's what I asked. Okay, thank you.
Yeah. Okay, guys, before I go to statement of changes in equities, I'm reading the last adjustment so that you guys will be able to understand it properly. On 1st of September X5, we have made 145 rights issue at 1.25 per share. The right issue was correctly accounted for on the 1st September X5. The shares are included in the trial balance above. That means if you see this equity share and share premium both, it is after rights issue. Okay, if I need to find out what was my opening balance, I'm going to just show you guys a glance of it about it. You can prepare that as working note number 5 also if you want to showcase that. Otherwise, you can directly show rights issue. What is the rights issue I made? 1 for 5 basis, correct? I had 1 for 5. That means 5 shares were there, existing shares. I made 1 share was 1 right, correct? So in total, how many shares it will become in the company? 6 shares. Correct, people? Yeah. If you see, what is the equity share value, the closing balance that you can all see? $1 each, 120,000. Is this closing balance or opening balance? Is this 120,000 closing balance or opening balance? Closing balance. That means it includes the rights issue. So if 120,000 shares are including rights, how many rights do you think I would have done? Do the cross multiplication. 1 into 120,000 divided by 6. I would have made a rights of 20,000. I would have had an opening balance of how much? Opening balance of 100,000 equity shares. Correct? Yeah. So my opening balance would have been how much, guys? Opening balance would have been, let me write this way. My share capital opening balance would have been how much? My share capital opening balance would have been opening balance would have been $100,000. Correct. I don't know what is my share premium opening balance, but what I have done in between, I have added rights issue at what value? $1.25 each. Correct. What is my face value, guys? In this question, how much is my face value? $1. Correct. If $1 is face value, I would have credited 20,000 into $1 into my share capital, and 20,000 into remaining 0.25 would have gone to share premium, that is 5,000. That is the reason my closing balance now is how much? For share capital, 1 million plus 20, and share premium, how much? It would be whatever the opening balance plus 5. Now, do you see the closing balance of share premium is 5? That means there was no opening balance. It was 0. Correct? Yeah. This is how your shares would have changed. Is it correct? You're able to understand this point? Everyone? All of you guys able to understand? Stuti, Sara, Preeti, everyone, Panish. Thank you, thank you, thank you. Okay. Now, based on this, I have to prepare statement of changes in equity. Whatever happens see, look at this, at 1st Jan 2000 X5. This is nothing but opening balance. What an all heading I will have? I will have share capital. Then what is the next heading I will have? Share premium. Then I will have retained earnings. Then I will have reserve surplus or revaluation surplus. What is the opening balance of share capital? $100,000. Where did we calculate this? We calculated this from working note number 1. Correct. Share premium was 0. That also working note number 1. What is my retained earnings opening balance? Look at trial balance. Can you all see my retained earnings opening balance? 158, 150 as per trial balance. 158, 150. Do you see any revaluation surplus opening balance? In whole trial balance, do you anywhere see revaluation surplus? There is nothing called revaluation surplus. Correct? It was 0. What was the total opening balance of your equity? The total opening balance of your equity was sum of all of this. You had opening balance of equity is how much? You have opening balance of equity was around 258, 150. Correct? Ma'am, can you explain the share premium part again? Okay. Sarah, you see, you understood that rights issue happened, 20,000 happened, no? That you understood? Yes. Okay. Well, how much is the rights I made? Read this. We made rights for $1.25 each. You're able to see this? Huh? Okay. What is the face value of the share? Can you see here? They've given equity shares of $1 each. Can you see? Right. So, in rights issue, what do you think I would have done? 20,000 is the rights I'm making. So, I would have collected 20,000 into 1.25. Overall, how much I would have collected? $25,000 I would have collected. But I should give 20,000 to my share capital and 5,000 to my share premium. Because anything more than face value should go to share premium. Correct. If the closing balance of the share premium is 5,000 and the one and only transaction happened in the business is only 5,000, that means opening balance was 0 and closing balance is 5,000. The in-trial balance, how much is it? It is 5,000. That is what we have recorded. So the opening balance had to be 0, right? You got it? Oh. Now, what and all changes happened in your statement of changes in equity, guys? We found out, okay, first, rights issue. We made rights issue. So, working note number 1. Again, how much it added to share capital, guys? It added share capital 20,000. Keep this sideways. Yeah. Share premium, how much it was? It was added to 5 million. Correct? One job done. Rights issue. Second, what is the next thing happen? Next thing we had is profit for the year. How much we have brought the profit for the year? It comes from the requirement A that we have calculated. Where do you think profit for the year will get added, guys? Where do you think it will get added? It will go to retained earnings. How much is it? 95080. Next, I have revaluation surplus. Coming from which working note? Working note number 1. Sorry, this was working note number 5. I'm in sleep mode. Sorry. Working note number 5. This was rights issue. Yeah. Revaluation surplus, working note number 1. How much is the one that we have recognized? It is 140 million. It is overall how much? 140 million. I will go write that. Anything else? Anything else that you guys know I missed it? Excess depreciation. What do I have to do? Transfer of depreciation. Coming from again same working note number 1. I should eliminate 5.5 million from retained revaluation surplus. Then I have to add it to where? I have to add it to retained earnings. I have done that. Then good. Deferred tax adjustment. Working note number 4. Deferred tax liability adjustment of how much I have to reduce from my retained earnings. It will be 28 million. Anything else in statement equity? Nothing. Yeah. What will be the closing balance as at 31st December 2005, guys? Share capital will have the sum of how much? 1 million, 100 million plus 20,000, 120,000. And share premium will have a balance of 5 million. Retained earnings will have a balance of 258,730. Revaluation will have a balance of 106,500. And overall, my total equity will be how much? My total equity will be 49,230. So now when you prepare statement of financial position, do you have to prepare once again equity? Not required. You can directly take this value of 490,230, or you can write share capital closing balance, share premium closing balance, retained earnings closing balance, revaluation surplus closing balance. Overall, you can write this will be your adjustment or requirement number B. With this, will you be able to calculate prepare financial position on your own? Would you be able to do? That's for 10 marks. See, any which ways, I am adding the answer along with this. Good. If you can do, well and good. If you can't do, I am sorry. ಇದಕ್ಕೂ ಮೇಲೆ ನನ್ನ ಕೈಲಾಗಲ್ಲ. I mean, more than this, I can't do anything. Okay. Chalo, guys. So I will share this recording notes both on the uh, drive. I hope you guys have the drive link. Not the drive link that I've shared recently. Do you guys have the drive link? It's there in the Telegram. I'm adding the financial position, but please. Chalo, I'm stopping to share. Please tell me if you guys have any questions. If you guys don't have any questions,